This is a long-term move where all the computing infrastructure in the world is moving from traditional architectures or single-threaded computing to accelerated or parallel computing that utilizes massive amounts of data to recognize patterns. So this is a long-term move that's going to take 10 to 20 years. And I think the growth rate is very hard to measure. There's been an initial spike in data center build out caused by basically ChatGPT and these generative AI models. The question I think investors are asking is the growth rate going to sustain at the same level? Or as we actually saw with Nvidia's earnings, the quarter-over-quarter growth rate is clearly slowing. They're still doing, $120 to $130 billion run rate, but at some point it can't double every year, right? So I think that's what people are trying to figure out. It's a huge opportunity, though. It's just a question of what is the multiple you put on it.
Exactly, and that raises a couple of questions. And speaking of the multiple, Jeff, given that AI is a story in the long term, and we are just arguably in the opening innings here, can we argue, or can we say that Nvidia looks reasonably valued? Perhaps not cheap, but reasonably valued given the longer term prospects?
Look, I will disclose I'm a shareholder in the company. I have been for over 20 years. I've held stock since I left the company. I think it's reasonably valued. It's just really a question of, are you a patient investor and willing to accept increases in valuation as the company grows? Or are you a trader that's looking to make a quick turnaround? And I think for those of us who are investors, we think it's fairly valued. And what's going to happen is, as more of these data centers get built out, there's going to be more applications that are built, which is going to then again spur more demand for data centers and hardware. And if you recall on the call, I think Jensen was talking a lot about some of the applications that are coming, and this is what I see in my world is every business, every industry is going to utilize AI. And so
absolutely,
it's not a question of if, it's just a question of when and how.
Among the stocks that people have been searching for is Nvidia. Thus, you may want to consider examining some of the information that may influence the stock's performance in the near future. During the last month, the returns on the company's shares, which produce graphics chips for gaming and AI, have been plus 11.3% compared to a plus 4% move in the S&P 500 composite. Over this time, Nvidia's industry, semiconductor, general, has increased by 12.5%. The crucial query at this point is, where might the stock go in the near future? On the other hand, news reports or whispers regarding a significant shift in a company's outlook typically cause its stock to trend, which in turn causes a sudden shift in price. Ultimately, a few key facts always take center stage when making a buy and hold choice. Our research is primarily based on the revisions that sell-side analysts who cover the stock are making to their earnings projections in order to reflect the most recent developments in the industry. A company's stock has a higher fair value as its earnings estimates increase. Additionally, investors often purchase a stock when its fair value exceeds its current market price, which drives up the price of the stock. As a result, empirical research shows a robust relationship between short-term changes in stock prices and trends in earnings estimate revisions. For the current quarter, Nvidia is predicted to report earnings of $0.72 per share, which would indicate a plus 80% year-over-year change. For the current fiscal year, the consensus profits forecast of $2.76 points to a plus 112.3% change from the previous year. The last 30 days have seen a plus 2.5% shift in this estimate. The consensus earnings estimate of $3.52 for the upcoming fiscal year is a shift of plus 27.5% over what Nvidia is anticipated to report in the previous year. The estimate has changed by plus 4.1% in the last month. Even while earnings growth is undoubtedly the best measure of a company's financial health, if a company can't increase its revenue, nothing happens. After all, a business can hardly hope to grow its profits over a sustained period of time without also growing its revenues. Thus, it's critical to understand the prospective revenue growth of a business. Regarding Nvidia, the collective sales projection of $32.59 billion for the upcoming quarter indicates a plus 79.8% year-over-year increase. The forecasts for the current and upcoming fiscal years, $122.19 billion and $165.65 billion, respectively, show changes of plus 100.6% and plus 35.6%. In the most recent quarter, Nvidia had revenues of $30.04 billion, indicating a plus 122.4% increase year over year. The same period's EPS of $0.68 is in comparison to $0.27 a year earlier. In the last 4 quarters, the company has outperformed consensus earnings per share projections. Throughout this time, the business consistently exceeded consensus sales projections. If you want to keep up with Nvidia's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market, so click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
To tech. Is everything okay in AI land?
Well, I mean, thanks for having me, Tyler. Yeah, I would start by saying, sorry I have to rain on your parade and stop talking about such an exciting thing like gold and interrupt you and talk about something as boring as NVIDIA's earnings.
Yeah.
But, I mean, I guess just to start there, because that is kind of the topic du jour, I would say it was more of a boring earnings report for NVIDIA, if such a thing exists. You know, I think we kind of like boring. I think boring is actually healthy for this stock and for the longer term for the AI space more broadly. But you know, NVIDIA was kind of a boring, standard beat and raise. I think there's still plenty to get excited about. I think given all their discussion of demand, discussion of finding new customers out there, discussion of broadening the product set, there's still plenty of runway for, I'd say, accelerated computing and AI as a subset of that to run. So yeah, I think there still is.
You own it? Would you buy more of it?
So Nvidia is one of the top positions in each of our funds: the Gabelli Growth Fund, the Global Growth Fund, and the Growth Innovators ETF. We've owned it for many years. We're long-term investors with Nvidia. I think a buy and hold approach has worked well for us. It's not something we tend to trade very actively on earnings reports. I'd say last night's earnings very validating of the investment thesis. We're happy to just hold it for the long term. Think the outlook is still over time pretty positive.
Without taking a stock's valuation into account, no investing decision can be considered efficient. A key factor in predicting a stock's future price performance is whether its current price accurately captures the intrinsic worth of the underlying business and the company's development potential. A company's stock can be fairly valued, overvalued, or undervalued by comparing its current valuation multiples, such as price to earnings, P/E, price to sales, P/S, and price to cash flow, P/CF, to its historical values. Alternatively, a company can be reasonably valued by comparing its valuation multiples to those of its peers. Examining Nvidia's results for the most recent quarter, we noticed some interesting patterns in the international sector's revenue that Wall Street analysts frequently track and analyze. The company's quarterly revenue of $30.04 billion represented a 122.4% year-over-year increase in revenue. Let us now examine Nvidia's income breakdown by foreign region to understand the importance of its business ventures abroad. In the latest fiscal quarter, China, including Hong Kong, accounted for $3.67 billion of the total revenue, or 12.2% of the total. Analysts had predicted the region would contribute $2.88 billion to the overall revenue. Therefore, this constituted a surprise of plus 27.49%. By contrast, in the preceding and prior year's quarters, the region's share of total revenue was $2.49 billion, or 9.6%, and $2.74 billion, or 20.3%. Taiwan's revenue for the quarter was $5.74 billion, or 19.1% of the overall revenue. This represented a 0.23% surprise to the consensus estimate of $5.75 billion. Looking back, Taiwan made contributions of $2.84 billion, or 21%, in the same quarter of the previous year, and $4.37 billion, or 16.8%, in the prior quarter. Wall Street analysts predict that Nvidia will report $32.59 billion in revenue for the current fiscal quarter, a 79.8% rise over the same quarter last year. Taiwan and China, including Hong Kong, are estimated to contribute 10.1% and 19.1%, or $3.27 billion and $6.21 billion, respectively, to this income. Nvidia is predicted to make $122.19 billion in total sales for the entire year, a 100.6% increase over the prior year. Taiwan's revenue is predicted to be 18.4%, $22.46 billion, and China's revenue, including Hong Kong, will be 10.1%, $12.37 billion, of the total. So what does this really mean for Nvidia's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Nvidia closed out a pretty mixed quarter for tech company earnings with a stumble as investors become wary of promises around AI growth. Now, the analysts we spoke to around Nvidia's results saying they could see some weakness from here. Take a listen.
At 6% of the index. Tech has become 31% of the index, and with communication services, 40% of the index. It's more top weighted than it was in 1999. It's not going to hold.
What it's not that good of a news for is the rest of the technology complex. AI has taken the oxygen out of the room for a lot of software companies.
We are in a lull, if you will, in the product cycle, completely expected, but a lull. And we do believe we will see Nvidia trade lower.
But still, the executives of these big tech firms, they remain optimistic.
Overall, AI PCs, we said before that we expected them to be 10% of the market in the second half, and we think we are going to be above that goal.
Hopper demand remains strong, and the anticipation for Blackwell is incredible.
So you're going to be able to do all these things right inside our platform, and that is exciting for our customers. They get real value from AI now.
So the bottom line here, Sazi, I mean, we're getting a mixed picture of where AI hype is headed, and that is the larger concern around any type of bursting that we might see in the future of an AI thematic bubble.
I often very much agree with you a lot of time, most of the time, but I have to disagree a little bit, Brad.
Go for it.
I think AI is just doing fine.
It's here to stay.
When I hop into a Dell earnings call and I hear the word, things like accelerating AI server demand, you know, you cut through all the hype and pomp and circumstance around NVIDIA's earnings. You hop onto their earnings call. I hear the word accelerating demand for AI. I hear a strong backlog of demand for their next Blackwell chip. You know, you saw a clip there from Salesforce CEO Mark Benioff. He's getting ready to drop a whole bunch of new AI software at Dreamforce in a couple of weeks called Agentforce. I mean, the amount of AI that is about to come onto a Salesforce platform is very, very significant.
We're going to compare Nvidia Corporation's performance against that of the other 5G equities. The newest advancement in mobile networks is called 5G, or fifth generation wireless technology. Its goals are to dramatically increase speed, decrease latency, and improve the capacity and connection of mobile devices. The 5G industry is expected to be valued $15.03 billion in 2024 and could reach $229.41 billion by 2032, according to an industry research future analysis. Over the course of the projection period, this sharp rise translates into a compound annual growth rate, CAGR, of 40.6%. Some experts consider 5G and artificial intelligence, AI, to be two of the biggest technological trends. Director General of the GSM Association Mats Granreed recently discussed the close relationship between 5G and AI in an interview at the Mobile World Congress Shanghai on June 26. He also hinted that the two technologies' rise is not coincidental. AI is fed by 5G, and 5G is fed by AI, he declared. This is particularly true in China, where talks are already moving toward 5G Advanced, 5.5G, and standalone 5G network construction is well advanced. Matz noted that although some nations, like as the Philippines, lag behind, the relationship between 5G and AI is most noticeable in areas with extensive 5G coverage. Matz responded that there is little competition in AI and 5G between nations like the United States and China. Based on his experience serving on the GSMA board, which is made up of the world's 25 biggest mobile carriers, he stated that rather than competing, the focus is on developing common standards and specifications. He discussed the obstacles posed by various technologies for worldwide communication during the 2G and 3G eras. The digital economy was founded at a turning point when there was a move toward a single 4G standard. Matz thinks that 5G will take a similar route to become a global standard platform, and that this will include AI as well. He expressed confidence in the idea that everyone will eventually catch up and profit from the integration of AI with 5G, even though some areas may develop more quickly than others at first. With a suite of tools intended for both commercial and academic applications, NVIDIA's Aerial platform is driving the development of 5G and future 6G technologies. By leveraging GPU-accelerated libraries for critical network operations, the Aerial QDA accelerated RAM contributes to the development of software-defined, cloud-native 5G and 6G networks. Because of its flexibility, this framework can be expanded to include AI components to improve performance. Comprehensive simulations of 6G networks, ranging from individual towers to large cities, are made possible via the Aerial Omniverse digital twin. In order to assist researchers in enhancing network algorithms and transmission efficiency, it has realistic models and simulators. The creation of virtualized 5G networks, which utilize the company's processing hardware to increase performance, is also supported by the Aerial platform. Data centers become more flexible and effective when they can run AI and 5G apps simultaneously thanks to Aerial. In order to enable advanced 6G research and development, it gives researchers access to these technologies via the cloud and the 6G Research Cloud platform.